Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, January the 25th, 2010. Change of character today for this market, and we can see immediately that the series of red-bodied candles has ended and we now have a green-bodied candle. Very small green body though, so not an extremely bullish candle, but the important thing here is that the market has lost all of the bearishness that it had, and it was a very bearish previous 2 days in this market. It's been a long time since we've seen that amount of bearishness in the market for 2 consecutive days, and we can't see it anywhere on this on the data displayed on this chart over the last few months. Interestingly, the market has traded down to the top of the Kumo and found some sort of support there. So there is potential for a reversal based on the support at the top of the cloud. Just looking at the candle, with it being a very small green body, it means that the buyers have made some net bullish progress on the day between the open and the close, but the market has closed just down below the midpoint level, which means that they failed to take control of this market. Having said that though, the bears really haven't taken control here, and they haven't really shown any strong commitment to taking this market lower, and the market did fail to take out the low of the previous candle. The market is in a first time frame downtrend, so we still have a series of lower highs and lower lows. Today's candle failed to take out the low though, so that raises doubt about the ability of the market to continue in the first time frame downtrend. But also in bar chart terms, this is an inside day, and the inside day is where the range of the body of the current candle is completely within the range of the previous candle. It raises doubt about the strength of the bears in this case. In candlestick terms, this is a reversal pattern. It's a Harami reversal pattern, and Harami reversal patterns usually have a fairly high probability of success. And this is where the body of the current candle is engulfed by the body of the previous candle. So it's telling us that the side that were in control and that were making net progress have failed to make the same amount of net progress the previous day. With this type of reversal, we need confirmation, so we need to watch the high of the current candle, which is around the 1100 region, round number, so we need to be aware of that potential resistance there. And we need to watch that for a potential higher high and higher low for a change of trend in the first time frame. This candle is very similar to an inverted hammer type candle, so the opposite of the hammer where the shadow would be on the bottom of the candle but it's on the top. Not as strong a reversal pattern as the hammer, but the inverted hammer is a potential reversal because the market is closed down roughly towards the low, certainly below the midpoint level. So there is potential for the reversal. So we do need to watch the high of the current candle. As I've said, potential resistance around this 1100 to 1106 region, where we previously identified that to be an area of resistance. And potential resistance up around the 1120 area, where we have both the Kijun-sen and Tenkan-sen. Now the market is trading within the cloud, which means that we have a neutral market at the moment. So in overall terms, the market has lost the bullishness that it had previously. The market was quite bullish for quite some time, and that's been lost, and we have a neutral market, and we have the market trading down below the Tenkan-sen and Kijun-sen, which means that in the fast and medium term time frames the market is negative. We also have a potential crossover to the downside of the Tenkan-sen below the Kijun-sen. Hasn't crossed yet. They're roughly at the same level. Well, they are exactly at the same level, so there is potential for that crossover to occur, which would be a very weak sell signal. Certainly not one that I wouldn't be prepared to take that as a sell signal. But in Ichimoku chart terms, that is a weak sell signal whenever we have a crossover of the Tenkan-sen and Kijun-sen. Obviously, the strongest sell signal would be if the crossover occurred down below the cloud. So, considering that the market has lost a lot of bullishness here, bearishness, and we have potential for very strong support down through the cloud and at certain levels down through here, then there is potential for the market to start trading up again.